Hi children, myself Kirti K, Assistant Professor, Department of Commerce International Business, Sri Narayana Guru College, KG Chavadi, Coimbatore. I am discussing this video here to the calculation of assessable value for imported goods with the case study. Here, Mr. Q imported goods from US and following are the details after conversion of US dollar to Indian currency. So here they gave the details as invoice value is rupees 3000, insurance value is rupees 18.35 and the freight value is rupees 300. So you have to calculate the assessable value and also calculate customs duty. If the basic customs duty is 10%, social welfare surcharge is 10% and integrated goods and service tax, that is IGST, is 18%. So at first you must know what is assessable value. Then only you will know how to calculate the assessable value for imported goods. So it is the value which levy upon the various duties and taxes are levied. So assessable value is the value upon which various duties and taxes are levied. The calculation method of assessable value was changed on 26th September 2017 and mainly it is calculated for to know or the calculation of customs duty. To calculate the assessable value, at first you need to calculate the CIF value. CIF value is cost, insurance and freight value. As per Circular 39/2017 of the Customs, it defines or it says that the CIF value, that is cost, insurance and freight value, and assessable value are the same. So CIF is cost, insurance and freight, which is the value is the total value of invoice value plus insurance plus freight plus X work charges if any. So in this case study, they gave only the invoice value rupees 3000, insurance value rupees 18.35, freight value is rupees 300. So we know that the CIF value and the assessable value are the same as per the circular issued on 2017, that is the circular number 39 of the Customs says that the CIF value, that is cost, insurance and freight value, and the assessable value are the same. So first we know that the invoice value, insurance value and freight value of the consignment or the imported goods. So at first we have to calculate, to get the assessable value we need to calculate the total value of invoice value plus insurance value plus freight value. Here we know that the invoice value is 3000, insurance value is rupees 18.35 and the freight value is 300. While adding these three, that is 3000 plus 18.35 plus 300, we will get 3318.35 as CIF value. We got the CIF value. Then we know that as per the circular 39/2017 of the Customs, CIF value is also the assessable value. So here the assessable value is 3318.35. So in this case study, the next calculation is on the basis of, or next calculation is customs duty. So at first you must know what is customs duty. Customs duty is also levied at the time of import and export of goods from other countries. So customs duty is calculated on the basis of the assessable value. And in normal, import customs duty is the total of basic customs duty, social welfare surcharge and the IGST, that is integrated goods and services tax. So, in this question or in this case study, they gave that the basic duty or the basic customs duty is 10%, social welfare charges is 10%, and integrated goods and services tax is 18%. If this is the percentage of these three, what will be the customs duty? So, we know that customs duty is calculated on the basis of assessable value. So, here we got the assessable value as rupees 3318.35. Here, the basic customs duty is 10%. So, what will we do now? We have to calculate the 10% of the assessable value. Then we will get the basic customs duty. Here the assessable value is 3318.35 and basic customs duty is 10%. While calculating 10% of 3318.35, that is our assessable value, we got rupees 331.835 as basic duty. So the next calculation is social welfare surcharge. Here we know that the import customs duty is the total of basic customs duty plus social welfare surcharge plus integrated goods and service tax. We got the basic customs duty. Next we have to calculate the social welfare surcharge. Here they clearly given that 10% is the social welfare surcharge. And we know that the assessable value here is 3318.35, isn't it? So, here we have to calculate the social welfare charges, that is 10% of the basic duty. So, here we got 33.1835 as social welfare charges, and the integrated GST is calculating on the basis of assessable value plus basic customs duty plus social welfare charges. By adding these three and find out the 18% of the same, then we will 663.00633 as integrated GST amount. And if the imported goods are excluding IGST amount, then the total customs duty will be the basic customs duty plus the social welfare charges. Here the basic customs duty is 331.835 and the social welfare charges is 33.1835. While adding these two, we will get rupees 365.0185 as total customs duty if that is excluding IGST. If the total customs duty is including IGST, then we have to add the basic customs duty plus social welfare surcharges plus the IGST, that is integrated goods and service tax. While adding these three, we will get rupees 1028.02483 as our total customs duty if the IGST is included. And the third calculation in this case study is calculation of IGST assessable value, that is integrated goods and service tax assessable value. So we know that IGST assessable value is charged for all imports. Integrated goods and service tax assessable value is charged for all imports. It is charged on the basis of the cumulative value of the product, which includes the customs duty. To calculate the integrated service tax assessable value, at first you need to add the assessable value plus basic customs duty plus social welfare charges. So we know that here the assessable value is 3318.35. The basic customs duty is 331.835 plus The social welfare charges is 33.1835. While adding these three, we will get 3683.3685 as integrated goods and service tax value. So, hope you all clear with the calculation of assessable value, customs duty and also the IGST assessable value. Thank you.